And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, prop firm trading, building EAs for MetaTrader 4, MetaTrader 5, and all those fun things that make us money, or hopefully they make us money. It's not a guarantee. It's Tuesday, April the 7th, and we are getting into the what do we have going on today? We have a whole lot of things going on today as far as event risk. We have the war in Iran still going, which I think everyone's looking forward to an end to that. We're also looking forward to a lot of other things going on today. However, today's not going to be that big of a risk day. We've got durable goods coming in today, durable goods orders coming in today, as well as some other things. But in the meantime, this is what we've got to talk about. First, we are going to be talking about putting money at risk. So let's talk about those risks, and you need to know about them because something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. At this time, I have held an NFA registration in the past. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Carefully, only trade the funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we're going to be working on today. Since I get one more screen up, there we go, and here we are. And here we are with Trading Forex for Profit. This is a fun little platform that I'm discovering. It's kind of cool. You can go in here, and it's still under construction right now, so it's still not quite up to par yet, but it's getting there very quickly. So we'll get to that shortly, but in the meantime, let's go ahead and see what we've got coming up today. We have, not a whole lot going on. Not many red letter things going on. We do have a couple of orange ones. The durable good orders for the United States, as well as the PMI for Canada, if you're trading the loonie. And then if you're trading the Kiwi, we have the official New Zealand tax rate coming in. They're expected to hold. We'll see about that. Let's see, as far as what kind of atmosphere are we in? Oh, risk on. So look at that. We're looking forward to dollar going down, as well as a lot of other things taking place. That means the stock market might be going up, maybe. It also means that the DXY could be coming down, maybe. You know, depending on anything else, it could change throughout the day. But right now we are on risk on. So let's see what that means. Well, that means that right now the Aussie and the Great British Pound are the number one and number two currencies, with the euro close behind. The yen is close behind that, and way down there is the dollar, U.S. dollar, and the Canadian. So we'll see what happens with that. We're expecting a lot of things to happen with the Iran conflict, like peace to break out. Well, let's have this neat little article right here on US PMI. It's interesting, saying that the underlying signals for PMI are not as robust as one would seem. So that means that we could be seeing a lot of more of a pullback in the USD, and that would mean an increase in the pound versus the dollar and the euro versus the dollar. So we'll keep an eye on that. In the meantime, I want to look at a couple of things. Let's look at the US 10. Right there. I want to get in the habit of looking at this more often. The U.S. 10 yield is the pretty much the driving force between currency trading. It is the bigger one that everyone watches. Of course, everyone watches all the interest rates, but the U.S. 10 is the number one. And the U.S., they're all coming down. How about that? So we are looking at dollar weakness, which I have mixed feelings about that, because they say it's dollar weakness. However, it does indicate that money is flowing into the bonds. So bonds are typically a safe haven type of investment, but for risk on activity, there is an awful lot of safe havening going on. But we could always we could always have interest rates coming down in the United States. We would love that. That means less inflation, and that means happier people, pretty much. So let's get the DXY right now. The DXY is right there, and as I mentioned yesterday, we're looking at about 20.99.7 as the breakout for that. We'll see if that maintains that pitchfork, or if it's going to make that pitchfork obsolete. Today is probably the day that's going to happen. It's either going to bounce or it's going to go down. And of course, that's the way it is in all trading. It's either going to go up or go down or stay the same. So you've got three options. So which one's it going to be? We don't know. I am interested in watching that come down a little bit. I think it's going to come down with the with peace breaking out for the Iran war. So we'll see what happens with that. And yes, I do have trades in on the full disclosure. I do have trades in on the buying the dollar versus the the euro versus the dollar and the pound versus the dollar. So let's see what's going on here. It looks like the pound is eking out a little bit higher than the euro this morning. Right behind that, we have the inverse of the DXY perking up a little bit. We'll see if that can break out to over 115.8 would be nice. Dollar versus the yen consolidating. Look at that consolidation. A very tight consolidation for the dollar versus the yen right now. I would not get into that trade right now. Pound versus the dollar. Pound versus dollar is perking up. Look at that. It's kind of going up. So it's not anything too terrifying. So it might be a good trade to get into. Pull away from the writing a little bit, look for support here, and we found it, and now it is getting up into a big resistance area. We'll see if it can overcome that to get back up to about 212.5. That would be the target's 80 pip move. Might work, but you are buying right into support. Pardon me, buying right into resistance. I'm not sure if that would be the good one, good trade to go with. Might want to start with a small increment, and then increase your trade size, your lot size. All right, euro versus even the euro versus the pound is starting to perk up a little bit. Not enough to write home about yet, but we're looking at getting over the 2025 weekly high close right there before it starts getting into a full breakout type area. The dollar versus the CAD right here. It is, kind of hanging out. I don't have much more to talk about the euro versus the CAD. Canadian versus the dollar. Pardon me, the dollar versus the CAD. Usually it tracks oil, but not anymore. It has broken away from its convergence with oil, I guess is what you'd call it, or a correlation with oil. I think that's a better word that you call it with the oil market, because the oil market's still up, and the Canadian versus dollar is coming down. So we'll see how that goes. All right, so after that we have the Aussie versus the dollar right here, and that is at 69.4. Still trying to break out of that little area right there. If it does, then we're looking at it could possibly move on extended dollar strength. We'll see if that dollar weakness can extend. The U.S. dollar weakness, that is, can extend. I would give that a push right back up into the 72, 71 area. Hadn't quite hit 72 yet, but it's kind of working on it, thinking about it. Gold, big indicator of what's going on with the dollar. Dollar comes down, so does gold lately, and it is not really going to gangbusters anymore. Gave up 5,000 pretty briskly, so we'll see if that can continue. It looks like they're eking out a little bit of gains this morning. Again, not a whole lot to write home about. Platinum, right there. Metals are kind of still. Palladium, right there. Again, not really going anywhere. Silver, look at those dojis. 2 dojis in a row. So silver is just kind of hanging out at 72.8. So we'll see if that can continue. See what happens with software stocks yesterday, just for kicks. Software stocks are not going gangbusters at all. They're down 30-40% over lifetime. So the index that everyone watches is the IGV, and it's at 80.46 right now. HubSpot, one of my favorites to watch, is way down here. I do not invest in HubSpot anymore. I'm no longer a customer of HubSpot's. It's down to 245, down from 800, I think is where it was once upon a time. Salesforce, again, same story, down 30% on the year. Oh, down 30% on this year. That's gross. Come back out to here, not monthly. Yeah, let's look at monthly. See what's going on with that. Monthly high was 368. It's now trading at 185. Last time it was that high was the days of COVID. And right before that, in 2020, again, the days of COVID. And this is where all the government money started flowing into the market. And it crashed all the way down here to 131. So that's not the lowest we've ever seen, Salesforce. How about that? We'll see if that what happens with that. I'll go back to daily. So software stocks have been all over the place. No wonder my business collapsed. Yes, I do have a very personal take on that. Intuit, down. My payment cleared yesterday, so I'm still an Intuit customer. GoDaddy, I have pulled back from GoDaddy because Microsoft 365 is very much no longer required in the world. I never thought I'd say that because I used to always have to scrounge to find my latest copy of Microsoft Office back in the day. Those days are pretty much gone. Adobe, it's right here. I should put Alphabet in here some, but I guess we can see that. NVIDIA, right here, with watching the AI market moves. Now look at that, upward perked up almost 3.5% yesterday. That is not a buy. That is a solid sell. Let's see what the sentiment is on it. Sell. Analyst rating, buy. Somebody's saying it looks great. That's wonderful. Oh well, with that, that's about all I've got for today. If you have any, just want to remind you that if you like this video, then go ahead and hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to, talk to me directly, then just comment in the comment section, and I'll get back with you as soon as I can. In the meantime, you guys have a great one. Happy trading. I'll talk to you later. Bye.